Hi friends, welcome to weekly view on markets. This week Nifty ended at 17,944 and posted a gain of 0.49%. So Nifty almost traded in a flat range during the week. Bank Nifty lost about 1.03% and closed at 41,131. Mid cap index lost about 1.25% and closed at 30,642. Small cap index also lost about 1.29% and closed at 9417%. The India VIX, that is the fear index, closed at 13.08 and gained about 2.59%. The market has been trading in a very narrow range for past few weeks, and we have come to the end of the Q3 result season. So there is no much trigger for the markets to either go up or to go down. So we'll discuss these things in detail in few minutes. Let us look at the sectoral performance for this week. Most of the sector traded in a narrow range. Infrastructure, commodity stocks, media stocks, FMCGs, metal stocks, and energy stocks gained between 0.5 to about 1.7%. Many sectors were in red. PSU banks closed with a loss of 2.77%. Private banks also lost about 1.3%. Pharma stocks lost about 1.4%. Realty and media stocks also were down by more than 2%. There were more declines than the advancing stocks during the week, and many sectors were in the red. The number of sectors traded in the green were very few with limited upside. Now let us look at technicals of the market. This is the daily chart of Nifty. We can see that market has traded in a close range of 17,800 and 18,100 and closed in the middle of this range. As there are no any positive or negative major clues, the market is trading in a tight range. This kind of consolidation in the market is likely to continue for the next week also. This is what is indicated by the chart. If we look at the weekly chart of Nifty on a long term scale, the market range has been 18,600 on the higher side and 17,000 on the lower side. So I expect the market to trade in similar range for some more time to come as indicated by the charts. So we'll get a major movement or uptrend in the market only when it crosses 18,600 and stays above that. Or we'll see a major breakdown if market starts trading below 17,000 with some negative news coming in from various quarters. Now let us look at Nifty mid cap chart. This is the daily chart of Nifty mid cap index. Here also you can see the trading range has been 30,000 on the lower side or 30,500 on the lower side and 31,000 on the higher side. The mid cap index has been trading in this range for quite some time, and this range is likely to continue for few more weeks. Let us look at the long term chart of Nifty mid cap index. Here also the situation is looks similar. That the trading range of 33,000 on the higher side and 30,000 on the lower side for the Nifty Mid Cap Index. Now let us look at Nifty Small Cap Index. This is Nifty Small Cap Index daily chart. On this we can see around 9,300 on the lower side and 9,600 on the upper side. So this range is likely to continue for some more time. Let us look at the long term chart. On the long term chart, we see that 9,400 on the lower side and 10,100 on the higher side for the Nifty small cap index. So Nifty small cap index has to go about 10,000 and hold above that level, then we may see a big rally in the small cap index. Till such time, Nifty small cap index also will trade in a range. The whole market looks like a range bound market for this time. Let us look at Nifty Bank Index. This is a daily chart of Bank Nifty Index. Here also we see that 41,100 is the support level and 42,500 remains a resistance level for the Nifty Bank. As long as this range bound market continues, Bank Nifty also is likely to trade within this range only. Now let us look at some of the economic indicators and market fundamentals. CPI inflation, that is consumer price based inflation, for the month of January has come during this week, which has come at 6.52, and it has increased from 5.72 in the month of December to 6.52 in the month of January. So the inflation has gone above the RBI tolerance band of 4 to 6%. It has gone above the RBI tolerance band of 6%. And RBI has rightly raised the interest rate by 0.25 basis point in the last monetary policy committee meeting. So they are not very sure that inflation has firmly started trending down. But one good thing is that even though CPI inflation has gone up in the month of January, wholesale inflation, which was very much higher in the earlier months, has come down at 4.73 during January, and it was at 4.995 in December, and it has come down. So RBI will watch these figures for a while until a clear cut trend emerges in the inflation. They will have the tight monetary policy. RBI forex reserves is quite stable at around 575 billions. Crude price is stable at around 86.39. Crude prices have been trading around 80 to 85 level for past few months, which is a very good oil prices for India. A stable oil price helps companies to manage their fuel costs, and it is good for the economy. The USD INR price, that is forex rate, is also between 82 and 83 for past few months, and it is holding at that level. So these all macroeconomic indicators indicate a kind of stability uh, in the economy, and this will help corporates to manage their businesses and profits as Many of these indicators are quite stable for a few months. DIF have bought 2,733 crores during this week, and one welcome change is that FIIs have stopped selling, and they have bought around 4,000 crores during this week. We'll have to wait and watch how this FII buying activity will proceed further for a few more weeks. If FII buying comes back, then definitely market will be heading higher. Retail investors have been putting around 13,000 crores every month into mutual fund SIPs. That money is coming into the stock market. So there is a steady flow of DII money into the market. And if FIIs turn buyers, then definitely market levels will be higher in the coming weeks. There is a fresh news on Adani company saying that some of the promoters' relatives have pledged the share, which has not been disclosed to the exchanges by Adani Group company. So this may cause some more fall in Adani stocks in the coming week. Retail investors should stay away from these companies as every day some other negative news is coming on Adani stocks and share prices have been continuously falling. So I urge retail investors to stay away from these companies. The result season of quarter three is over. So I have analyzed the overall results of different sectors. So in Q3 results, banks and NBFCs have posted good results. We have seen recovery in these sectors after many years of NPA and other issues. So these companies have now improved their balance sheets. NPAs have been controlled and they have been posting good profits. There is a credit growth and growth in profits with the asset quality improvements. NPAs have been controlled. So with this, the outlook for banks and NBFCs from here on is quite good. Infrastructure and manufacturing companies have posted good results. They have posted growth in sales and revenues, and also they have shown improvement in their margins, operating margins as well as net margins, and also in profits. The outlook is positive for them. FMCG companies and chemical companies have posted mixed results. FMCG companies like Britannia, ITC, Nestle have posted fairly good results, whereas Dabur, Hindustan Unilever posted results in line or slightly missed the estimates. So it is a mixed bag of results from FMCG companies. The rural demand is yet to pick up. So FMCG companies may take one or two more quarters to improve their margins. Similarly, chemical companies also have come under pressure. Some of them have posted degrowth in the sales numbers and their revenue numbers. Plus, their profits are affected by high input costs. They are affected by the inflation, it looks like. So, the profits of chemical companies have shown a degrowth. So, we'll have to wait and watch. It may take another two more quarters for chemical companies to improve their performance. Auto sector has posted fairly good results. They seems to auto sector companies seems to have bottomed out after 4 or 5 years of very sluggish growth. Auto sales numbers also are improving, and we have seen margin improvements. And outlook for automobile sector remains positive in the coming quarters. Oil and gas sector have come out of losses. In previous quarters, the crude prices have been highly volatile, which has affected oil and gas sector. But last few months, crude has been trading in the range of 80 to 85 dollars per barrel. So that stability in the crude price has resulted in oil companies coming into the green. They are out of the red. Their profits are shown, but not to the desired extent. So they are expected to post a good result in the coming quarter if oil prices remains steady around these levels. Housing finance companies are affected by rising interest rates. RBI has been steadily raising interest rate for last 1 year. The demand for housing loan seems to have slightly gone down, and the margins of housing finance companies have come under pressure because of this. Till RBI declares that inflation is under control and they switch the policy stance to neutral or accommodative. Till such time, housing finance companies may see margin pressure. So they may take few more quarters. The overall results for next quarter, that is last quarter of this financial year, will be just like Q3 results only. RBI may maintain tight policy measure as inflation is still high, and when there is a confirmation that inflation has come under control, RBI may have a accommodative policy. So then only we'll see improvement in earnings of the company. We may see earnings improvement in next financial year, maybe in the second half of next financial. RBI forecast 7% real GDP growth for FY24, that is the next financial year. They have studied the budget and they have stated that the budget proposals are good, but they have to be implemented quickly, which will result in good corporate performance and GDP growth. What investors should do? Investors should invest in fundamentally strong companies because the market have already seen more than 1 year of consolidation. So that has built a good base for the markets. Markets are not at very cheap valuation, but they are fairly valued. Investors should choose fundamentally strong companies, and if anybody doesn't have the skill to identify stocks with fundamental and technical analysis, they are better off by investing through mutual funds. And while investing in mutual fund, always SIP is the better way, systematic investment plan. So common investors who do not have the skill to do the fundamental and technical analysis should invest through SIP route in mutual funds, and in next coming few years they can expect for good returns. This is all for this week. If you like my video, please share with your friends, subscribe to my channel, and you can post your questions. Thank you. We will meet again next week.